Welcome back to another deep dive. Today, we're going to be taking a look at SCHD,
Okay.
the Schwab U.S. Dividend Equity ETF.
All right.
And we really want to see if it lives up to all the hype as the
Mm-hmm.
Dividend King, right?
Hmm.
A lot of people out there are looking at SCHD wondering, hey,
Yeah.
could this maybe even help me reach my goal of $80,000 per year in dividend income for retirement?
Right.
So we want to dive into that, see if it makes sense.
Yeah.
Now, you're probably familiar with ETFs already,
Yep.
but just as a real quick recap,
Sure.
SCHD is designed to track the Dow Jones U.S. Dividend 100 Index.
Okay.
That means it holds all the same companies as that index.
That makes sense.
So one of the things that makes SCHD really attractive, I think right off the bat,
Yeah.
is that it has a remarkably low expense ratio.
It does.
It's just 0.06%.
Yeah. Think about it this way.
Ah,
For every $10,000 you invest,
Yeah.
you're only paying $6 in fees.
that's pretty good.
That's a pretty sweet deal. It leaves more of your money to potentially grow.
Yeah, definitely a point in SCHD's favor.
Yeah.
So is it really the quote-unquote king of dividend ETFs, though?
Well,
I mean, there's a lot of them out there.
right. King is a very subjective term,
Sure.
but SCHD makes a strong case.
Okay.
So let's look at some numbers.
Right.
As of December 17th, 2024,
Sorry.
SCHD's market price had a year-to-date return of plus 19.58%.
Pretty good.
Not bad at all. But
Yeah.
here's the thing.
Okay.
The large value category,
Okay.
which SCHD falls under, actually had a slightly higher year-to-date return of plus 21.36%.
So it's not leading the pack in its category for this year.
Right.
Does that hurt its king status?
Not necessarily.
Huh.
We're talking about long-term investing here.
Yeah, especially for retirement.
Exactly. And short-term fluctuations are totally normal.
Right.
When you look back at the average annual return since SCHD's inception back in 2011,
Okay.
it comes in at a solid plus 13.61%.
Okay, that's a little more impressive.
Yeah.
But what about other ETFs out there, specifically ones that focus on dividends?
Right?
How does SCHD stack up against the competition?
That's where SCHD's unique approach really comes in.
Okay.
It's not just chasing the highest dividend yields out there.
Okay.
It's really focusing on companies with a history of consistently paying dividends and that have strong financial fundamentals.
So it's going for quality and sustainability
Okay.
over just the big payout, right?
That's a great way to put it.
Which can be risky.
It really can.
I mean, it's like the tortoise and the hare.
Exactly.
SCHD is just kind of slow and steady, wins the race.
That's right.
It's prioritizing reliable income, that's steady growth potential.
Mm-hmm.
And, when you're building a portfolio for retirement,
Right.
that can be really appealing.
Absolutely.
Yeah, you don't want to be on a roller coaster ride with your retirement funds.
Exactly.
So how does that focus on quality and consistency actually play out in SCHD's long-term growth?
Okay, so imagine you had invested $10,000 in SCHD back in 2011. All right. As of November 30th, 2024, with dividends reinvested,
Sorry?
that investment would have grown to $30,477.
Wow, so more than triple.
Yeah, and if you compare that to
Mhm.
the Dow Jones U.S. Dividend 100 Index, which would have reached $29,404,
Okay.
and then the large value category as a whole at $24,036.
So it really seems like their strategy is playing off.
Yeah, it really does.
Okay. But I've heard sometimes that dividend stocks can lag behind
Yeah,
during times when the market's growing rapidly.
sure.
Is that something to be concerned about with SCHD?
It's a valid concern.
Okay.
And it's true that no single investment strategy is going to win all the time.
Right.
But SCHD doesn't just invest in any dividend-paying company.
Right.
They carefully select companies with strong financials
Okay.
that have a history of both paying dividends and growing their earnings over time.
So it's not just about the dividends. It's also about
Right.
choosing companies that are likely to appreciate in value on their own as well.
Exactly. It's about finding that sweet spot between generating income and participating in market growth.
Got it.
And that brings us to another important point, SCHD's diversification.
Oh, yeah, diversification.
Right. Don't put all your eggs in one basket.
Exactly.
And SCHD does a really good job at spreading risk across different sectors of the economy.
Okay.
As of September 30, 2024,
Mm-hmm.
their largest sector allocation is financials at 18.2%.
Okay.
Then comes healthcare at 15.83% and consumer staples at 14.02%.
Sounds really well diversified.
It is.
Not overly reliant on one industry.
Exactly.
Which can help kind of cushion against some of that market volatility.
That's the idea.
Okay, so what about the companies themselves in SCHD's portfolio?
Yeah.
What kind of businesses are we talking about here?
That's where things get really interesting.
Okay.
Let's peek into SCHD's basket of holdings here.
Okay.
Get a feel for the companies that are driving its performance.
All right, I'm ready.
All right, so as of December 17th, 2024,
Okay.
the top 3 holdings in SCHD are BlackRock Inc., ticker symbol BOK, Cisco Systems Inc., CSCO,
Okay.
and Home Depot Inc., HD.
Big names. So we're talking about well-established companies, solid track record.
Absolutely.
That aligns with what we were talking about before, the quality and the consistency.
It does.
And, I mean, these are companies you'd expect to find in a dividend-focused ETF like SCHD.
Sure.
But it's interesting, even within those top 3 holdings, there's diversity, right?
There is.
BlackRock is a global investment management corporation.
Right.
Cisco Systems is a tech giant specializing in networking and cybersecurity.
Right.
Home Depot is the retail behemoth catering to the home improvement market.
Totally different industries.
Yeah, so even within just the top 3, you've got a good spread across different industries.
That's right.
Which is great. That's another layer of diversification, isn't it?
It is.
And when you look at the broader portfolio, there's even more variety, right?
Oh, absolutely.
I mean, you've got companies from all kinds of sectors: energy, industrials, consumer discretionary. So this really paints a pretty compelling picture of their diversification strategy.
It does.
But how does all of this relate back to that original question?
Right.
About achieving that $80,000 annual dividend income goal for retirement?
That's a great question, and one that we're going to explore in more detail in the next part of our deep dive.
Okay.
Remember, reaching a significant financial goal like that requires careful planning. And SCHD's diversification is just one piece of the puzzle.
All right, I'm intrigued.
Yeah.
So we're going to come back and tackle that retirement income goal head on when we come back.
Sounds good. So, before we were talking about how SCHD's diversification across different sectors and industries can be a real advantage for long-term investors, especially those looking for a stable source of income in retirement.
Yeah, definitely seems like it's designed to withstand those market ups and downs, which can be a comforting thought when you're thinking about your retirement nest egg.
Absolutely, and it brings us back to your goal of achieving $80,000 per year in dividend income from SCHD for retirement.
Yes.
Now, I want to emphasize, again, we're not giving financial advice here.
Right.
But we can explore some concepts.
Empower you to
help you think through the possibilities.
Yeah, make informed decisions, exactly.
So remind me again. What is dividend yield?
Okay.
And how does it factor into all of this?
Yeah, what's that?
Okay, so simply put, dividend yield is the annual dividend payment per share divided by the share price.
Got it.
It's essentially the return you get just from holding the stock.
Okay.
Separate from any price appreciation.
Okay, so just for holding it, you get a little something.
Think of it as a little bonus you receive just for being an owner.
Right, okay.
As of December 16th, 2024, SCHD's SEC yield, which is calculated over a 30-day period, stands at 3.71%.
Okay, 3.71%. So how much would you need to have invested in SCHD?
To generate $80,000 in annual dividend income.
Okay, so based on that yield, you would need approximately $2,156,334 invested.
$2 million, okay.
We arrive at that figure by dividing the desired income, your $80,000 goal, by the yield, 0.0371.
Right.
But it's crucial to remember this is a
Yes.
highly simplified calculation.
Of course, real-world investing is never that straightforward, right?
Exactly.
I mean, dividend yields can fluctuate.
Right,
Past
yeah.
performance is no guarantee of future results.
Of course.
But even with those caveats, $2 million
Yeah.
seems pretty daunting.
It can seem that way, but it's
Yeah.
important to remember that this calculation
Ah.
assumes a static dividend yield.
Okay.
SCHD, however, focuses on companies that have a history of increasing their dividends over time.
So potentially the dividend payments themselves could grow,
Exactly.
which could help you get to that $80,000 goal faster.
Potentially.
Yep.
And on top of that.
You have the potential for the share price to appreciate over time,
Okay.
which would further boost your returns.
Right.
This is where the concept of total return comes in, where you're factoring in both dividend income and price appreciation.
So it's not just about the dividends.
Right.
It's also about the overall growth
Exactly.
of the companies in the portfolio.
Precisely.
Makes a lot of sense.
And that's why SCHD's focus on
Yeah.
companies with solid fundamentals is so crucial.
Right.
You know, these are companies that are not only paying dividends, but are also likely to be growing their earnings and expanding their businesses over time.
Yeah, it's like planting a tree that not only bears fruit,
Exactly.
but also continues to grow taller and stronger over time.
I love that.
But I imagine achieving that $80,000 goal still requires a lot of planning and patience, right?
Absolutely. It's a marathon, not a sprint.
Right.
And that's where working with a financial advisor can be incredibly valuable.
Yeah.
They can help you develop a personalized investment plan, taking into account your specific financial situation, risk tolerance, and time horizon.
So it's about having a guide to help you navigate the complexities of the financial world.
Right.
But even without an advisor, there are things that listeners can do to start thinking about this right.
Absolutely.
Their retirement goals and whether or not SCHD could be a good fit for them.
There are tons of resources available online, including SCHD's prospectus, fact sheet, and portfolio holdings. You can also explore different retirement planning calculators and scenarios to get a better sense of how much you might need to invest and how long it might take to reach your goals.
So knowledge is power.
Absolutely.
The more you understand about it, the better equipped you are to decide if it aligns with your investment strategy.
Couldn't agree more.
Yeah.
Remember, investing is a journey, not a destination.
Right.
It's about learning, adapt, and making informed decisions along the way.
I love that perspective.
Good.
So before we wrap up our deep dive into SCHD,
Yeah.
anything else you think our listeners should consider when evaluating whether this ETF aligns with their goals?
Yeah, so we've spent a lot of time singing SCHD's praises, and for good reason. It seems like a solid contender for anyone seeking that steady dividend income and that long-term growth potential.
But are there any downsides?
Yeah, that's a really important question to consider.
Yeah.
No investment is perfect.
Right.
And SCHD is no exception.
Okay.
One thing to think about is your own individual risk tolerance.
Okay.
While SCHD is designed to be relatively stable, it's still an investment in the stock market. And that inherently comes with some level of risk.
Right. It's not a magic bullet.
It's not
immune to market fluctuations. I mean,
right.
We saw that even SCHD took a hit during the COVID-19 crash.
Of course.
Although it did recover well.
Yeah, it did. And that brings up another point.
Okay.
SCHD's focus on those dividend-paying companies might not be the best strategy for every investor.
Right.
You know, if you're young and you have a long time horizon, you might be more comfortable with a growth-oriented investment that prioritizes that capital appreciation over that dividend income.
So it's like choosing between a reliable sedan and like a sporty coupe.
I like that analogy.
Right. They both get you there.
Yeah.
But the ride's different.
It is.
Okay. So
speaking of different rides, another factor to consider is SCHD's sector concentration.
Okay.
Now, while its diversification across industries is a strength, it is worth noting that financials make up a pretty significant portion of its portfolio.
So if someone's already got a lot of exposure
to
financial stocks in their portfolio, maybe adding SCHD
might tilt the balance too far in that direction.
Too far.
Yeah.
Okay, and then finally, even though SCHD has a really impressive dividend history,
it does.
It's important to remember that dividends are never guaranteed.
They're not. Companies can cut or even eliminate dividends if they face financial challenges.
Yeah, even the most stable companies can experience unexpected events.
Of course.
So due diligence is key.
Always.
Even with something like SCHD.
Absolutely. Being an informed investor means staying up to date on the companies in your portfolio and understanding those factors that could influence their dividend payouts.
Great advice. So as we wrap up our deep dive into SCHD, sounds like the takeaway is this ETF has a lot to offer.
It does.
Especially for those seeking that consistent dividend income and long-term growth potential.
Right.
But as with any investment, do your research.
Please.
Consider your individual goals and risk tolerance.
Yes.
And maybe even seek guidance from a financial advisor.
I couldn't have summarized it better myself. Okay.
SCHD might be the dividend king for many investors, But ultimately, the decision of whether it's right for your portfolio rests with you.
Excellent point. And for those of you eager to explore more fascinating financial topics and discover other potential kings of the investing world, be sure to subscribe to our channel.
Please do.
We're here to help you navigate the exciting and sometimes complex world of investing.
It is exciting.
Thanks for joining us.
Of course.